Good afternoon, our esteemed viewers at home, and welcome today again to another insightful episode of Insights from Akinleye-Martins Legal. My name is Martins, and I'm still your host. Welcome and thanks for joining us. We've been discussing in the past few weeks about the concept of taxation and the principle of taxation, generally under tax law, as well as using our focus as what's obtainable in Nigeria as a case study. Today we want to discuss another aspect of tax law and what we call the value-added tax or the consumption tax. Depending on the genre in different countries, they have different names for it. Some call it value-added tax, some call it consumption tax. We had mentioned it when we were discussing the principle of taxation some weeks back, and today we want to focus on the concept of the value-added tax, what it entails, and using Nigeria as a case study, which is the current jurisdiction at the moment, using Nigeria as a case study, what's obtainable under the law in Nigeria, what are the goods, services and products exempted under the Value-Added Tax Act in Nigeria, for example. So today, what is a value-added tax? Ideally, is a tax on product or service which is borne eventually by the final consumer. So a value-added tax in different jurisdictions, not relative alone to Nigeria, is a consumption tax. It is assessed on the value added in each production stage. So there's a chain in a production line. When an item is produced, let's take for instance a food product. There are different stages in which, based on the laws in different countries, such companies that produce are being taxed. Of course, they pay corporate tax, they paid, the personal income tax on their staff, salaries and all that. But on the items produced, there are taxes imposed, except for items which the country wants to encourage either the production or the use of its service. Then they may not levy a tax on it. So the value-added tax is a consumption tax assessed on the value added in each production stage of a good or service. A good here meaning a product. Every business along the value chain receives a tax credit for the VAT already paid. So where tax has been paid on a particular item, if another business comes in, it's like the withholding tax when we're discussing it, that yes, if a tax has been withheld on a particular product, then of course, if they've paid tax on that item, then in certain jurisdictions they receive a tax credit for those value-added tax they've already paid. So that's what is obtainable in a couple of jurisdictions. However, the end consumer, which is the final consumer that consumes that product, that buys it in the stores, that the service is being rendered to, does not get tax credit. However, they pay the final tax for consuming that product or service. And that is the value-added tax. So when you look at it, each business along the production chain is required to pay taxes on value of products, goods or services produced or provided at different stages. So if a VAT, a value-added tax, has been paid in that value chain, of course it's allowed to be deductible. Of course, that is for calculation purpose. However, like we explained, the final consumer who buys off the shelf will still pay for consuming that item. That is what the value-added tax is all about. So let's go and look at what it is really when it comes to what's obtainable in Nigeria. There are laws made by the tax regulatory authorities in Nigeria, for instance, and we're using Nigeria as a case study, to determine what items are VATable. You know, under the law, they call them VATable goods and services. So items that VAT is meant to be levied on under the law, they are VATable items. And items that VAT shouldn't be levied on, that are exempted, those ones are non-VATable items. So the current regulatory legislative environment in Nigeria for value-added tax is made up of a couple of laws and regulations under the Value-Added Tax Act 1993, which is amended now in 2007. However, we have the Finance Act of 2019 and 2020 also that made a modification on value-added tax in terms of the percentage and what is obtainable. And there's a Value-Added Tax Modification Order of 2020 that was promulgated and signed, you know, as an order in Nigeria as the VAT Modification Order of year 2021, which the Minister of Finance in Nigeria actually signed. And it amended the list of goods and services exempted from value-added tax. So not all goods are VATable. Yes, we said the final consumers will have to pay the consumption tax or the VAT, which is the value-added tax, on items, but it's not on all goods or services. There are items that the law defines as being zero-rated goods and services. Those ones are non-VATable. So what are the amendments, you know, what are the goods and services, rather, that the VAT Modification Act Order of 2021, the VAT Modification Order of 2021, what are the items exempted? There are certain goods and services exempted under the Value-Added Tax Modification Order of the year 2021. And we're going to talk about some of these goods to enlighten ourselves. First, under the goods, they divided, the way the order is, they divided into non-VATable goods, non-VATable services. So services, don't forget, services are taxable. However, there are exempted services. So all under the goods now, all medical and pharmaceutical products are to be exempted from VAT. So when I am buying a pharmaceutical item, I'm not expected as a final consumer to pay VAT, value-added tax, on such item. Educational books and materials, they are non-VATable under that order. And this is something that is just recent in the year 2021. So educational books, educational materials are non-VATable. And there's a reason, there's a rationale why most of the time governments, those who promulgate these laws in the finance ministry, in the Federal Land Revenue Service, tax regulatory authorities, economic policy promulgators, there's a reason why they put some items as non-VATable, to be able to encourage the production of such goods in the economy. One, to be able to also encourage the consumers buying, because these are necessities, as it were. So when you're now taxing necessities, it could be discouraging. Don't forget, tax, ideally, under the law, is, in quotes, like a burden. So educational books, educational materials, they are non-VATable. Baby products including certain baby foods, baby bath sets, baby cabinets, they are non-VATable items. And we see that the production of these items are being encouraged even by the manufacturers in the Nigerian economy, or even being able to import same, because at least the tax burden is low on such items. Basic food items. When we say basic food items, not the luxurious food, but the basic ones that ordinarily the average layman will need to eat. So if I'm buying yam, for instance, in the Nigerian market, it's not expected to be VATable. I'm not expected to pay tax on the yam that I'm buying because the basic food item. On things like rice that they buy in the market, those ones are basic food items. However, luxurious food items, when it comes to like maybe some imported, packaged, let's say cereals, for instance, those ones, they're no longer basics. Then those ones are luxury. Those ones, definitely, they would not come under the non-VATable goods as provided for under the VAT Modification Order of 2021. Then we have fertilizers and locally produced agricultural chemicals. This is majorly to encourage agricultural production in the economy. So such items are not VATable. All form of exports, meaning if you are exporting items out of the country, of course to generate revenue for the country, but exports are non-VATable under that order. Items used, drugs used by animals, veterinary medicines, they are non-VATable items. Machinery and goods imported for use in export processing zone. Now there's a difference. We need to really be able to explain this properly, because we have said the order says all exports are non-VATable. Fine. So if you buy a machine or you import certain goods, you import the machine from outside the country to use in an export processing zone to produce certain things for the purpose of export, such will be non-VATable. So there will be no VAT, value added tax, paid on such machinery or goods that are imported for use in export processing zone of the free trade zone, provided, as we have mentioned, that all the machinery or the goods, they are meant to be used for the production of export items. That is really key. And the taxpayer must be able to justify that and establish that when claiming, that VAT is not meant to be paid on such machinery being imported or such goods being imported. Then we have the machinery and equipment purchased for utilization of gas in downstream petroleum operations. So where there is machine that are purchased, equipment purchased for utilization of gas in downstream petroleum operations, such item will be non-VATable. We have commercial aircrafts, commercial aircraft engines, the spare parts for commercial aircraft. Those ones too are not VATable. We have petroleum products, you don't pay VAT on them. Things used for agricultural projects, for agricultural purposes, they will not be VATable. Locally produced animal feeds, raw materials for producing baby diapers and sanitary towels, they are not VATable. We have renewable energy equipment, also not VATable. We have, interestingly, gas supplied by gas producing companies to electricity generating companies. So the GENCOs, as we call them in Nigeria, we call them, the GENCOs are the generating companies that generate electricity. They are different from the distribution companies that we call the DISCOs, that distribute electricity. But a company that is involved in generating electricity in the Nigerian space, where gas is supplied by any gas producing companies to them, or electricity generated by the generating companies and supplied to the national grid or to the Nigerian Bulk Electricity Company, and electricity transmitted by Transmission Company of Nigeria, which we call the TCN, to electricity distribution companies. Any gas supplied by such gas producing companies to any of these people, such is a non-vatable good or product, and that gas, VAT cannot be paid on it, VAT cannot also not be levied on it, because it's non-vatable, exempted items under the order. Then we have agricultural seeds and seedlings. So these are some of the goods majorly exempted from value-added tax under the VAT Modification Order of 2021. Then we have the services. Now, talking of the services, certain services are also exempted from VAT levies. So medical services supplied, they are not vatable. So as a final consumer, you are not expected to pay VAT in Nigeria on a medical service rendered to you. Then we have plays and performances conducted by educational institutions. As long as they're part of the process of learning. So when we have like maybe stage plays being performed by an educational institution, even if people are paying for it, the people coming to watch such shows are not meant to pay VAT on such performances. And the performers too, the organizers, are not meant to pay VAT or remit tax, VAT, to the government on such shows. Then we have services rendered by unit microfinance banks and mortgage institutions. Those ones also are non-vatable. It says here also all exported services. So if the work of the company or an organization is to export service out of the country, such exported services are exempted from value-added tax. Then the tuition relating to nursery schools, primary schools, secondary school, tertiary institution, such tuition, when I say tuition now, we're talking about the school fees, such are non-vatable. So value-added tax, they are not levied on such. Then airline transportation tickets issued and sold by commercial airlines, not private airlines. So if somebody has a private jet, it doesn't come under the modification order as an exempted good or service. But commercial airlines, where they issue tickets to passengers, they sell tickets, as long as those commercial airlines are registered in Nigeria as a business, definitely operating commercial, air transport service, such are non-vatable. We have the rental or lease tractors and other agricultural equipment for agricultural purposes. So any service rendered for agricultural purposes, maybe a company leases tractors, provides such services for agricultural purposes, such are exempted from value-added tax. Then the order also mentions something about shared passenger road transport service. So where the service being rendered is a shared passenger road transport service, such are exempted from value-added tax. There is also an aspect under the modification order called the zero-rated goods. So these are goods and services purchased by diplomats. So goods and services purchased by diplomats are zero-rated goods. Such are also exempted from value-added tax, as long as they are eligible under the order as zero-rated goods and services. Also, we have goods purchased for use in humanitarian donor-funded projects. So where, let's say for instance, the World Food Program, operated by the United Nations, buy certain goods to be able to give maybe to people in Somalia or some in Ukraine, places where maybe war is going on or they're quite impoverished. Such goods purchased for use in humanitarian donor-funded projects are all non-VATable under the VAT Modification Order of the year 2021 in Nigeria. And definitely, there have been certain amendments that order has made, to previous orders that regulates value-added tax in Nigeria. So amendments have been made to whether the issue of microfinance bank services rendered by them now being exempted from VAT. Initially, it wasn't so in that sense, that all microfinance banks, but now it has now narrowed exemption of microfinance banks. So now, not all microfinance banks are exempted. Now unit microfinance banks are the ones exempted. So we have those services being rendered by microfinance banks with tier 1 units or tier 2 unit licenses. Those ones are qualified for value-added tax exemption. So the issue is, this modification made sort of like removed certain covering or exemptions that had initially been there. Before now, all microfinance banks in Nigeria were exempted, but now it has limited it to, if you have a tier 1 unit license or a tier 2 unit license as a microfinance bank, that's when such a service can be qualified for VAT exemption. And also, for educational materials, for books, there are also certain modifications that have been made under the new order of the VAT that now qualifies certain items that are for educational purposes to be value-added tax exempted. However, if such books or educational materials are not solely or largely for educational purposes, it will not be exempted. So it has to be proven that such items are solely for educational purposes. Raw material production of all diapers, baby diapers, sanitary towels, pharmaceutical items and products, all those are exempted, as we have mentioned. And agricultural products too is an inclusion in the modification order of the year 2021. Now those agricultural products, seedlings, seeds, feeds, animal feeds, they are now included under the exemption list. We have the electricity, like we said, all gas being produced or supplied rather to generating companies. All those ones are definitely exempted from non-VATable items. And like I said earlier, there are rationale behind these exemptions, majorly to encourage production of certain goods or to discourage production of certain goods to encourage certain services. So these are very important when manufacturers, vendors providing services need to consider, because of course value-added tax, any tax is a burden, and when these services are being rendered, when these goods are being sold, there is a need to have an awareness of what exactly is value-added taxable or the ones that are not. So the modification order of the year 2021 that regulates the value-added tax, which basically states items that are exempted and those that are not exempted, encourages majorly manufacturing companies in certain sectors. So if somebody is producing baby products, it's a good one for them. Agricultural products is a good one for them. And also, it also reduces the cost of consumables in Nigeria. So basic food items being exempted from VAT is good news for the consumer. However, it's a different thing when, of course, the inflation in the system, does not naturally help matters. But ideally, that modification order of the year 2021 was a good step in the right direction by the Ministry of Finance in Nigeria, coupled with the tax regulatory authorities, to make sure that at least the burden of the final consumer is being eased. Albeit, knowing all these things, there's still a need for every taxpayer, be it a manufacturer, even the final consumer, to be able to consult tax professionals, tax consultants, on what their obligations are. Because the way the law is, this order is just a 2021 order, it's just last year. And probably not up to a year, really. So there are still different interpretations, different acclimatizations by different people in the sector, different business providers in different sectors in the Nigerian economy, to understand this new regime and not be paying taxes on what they are not supposed to pay on, or underpay, which could lead either to an evasion or to an avoidance of tax, as we had explained to us last week. So this week, we've been able to enlighten ourselves on the issue of value-added tax, what it entails, the case study in Nigeria, what goods and services are being exempted in the Nigerian economy. We hope this has been quite informative for us today, and we look forward to seeing you again in another episode of Insights from Exempted Legal, when we bring another insightful topic and discuss under the commercial law. Thank you, and God bless.